Hello, I'm Bill Simon, CPA in Clearwater, Florida. We have been in business for about 30 years, and through that 30-year period, we have done pretty much nothing except represent people before the Internal Revenue Service regarding all types of tax matters. So we have a lot of experience. Most of our clients come to us from other CPAs and attorneys around the country. And we've been very successful in helping clients, and that's what our business is all about, is helping people. Today I'd like to speak with you about a subject that is getting a lot of attention in the press, and that is that the IRS budget continues year after year to be cut, with more and more responsibility being placed on IRS because of more people filing tax returns. The Obamacare program is administered for the most part by the Internal Revenue Service. That creates a greater workload. And yet they are receiving less funds. A lot of people look at that and say, well, that's good because I have a less chance of being audited, or they won't come and try to collect my money. Well, yes, but IRS is the only cash register, if you will, that the government has. That's the money that runs this country. And Congress continues to spend the money even though IRS does not have the funds to collect the monies that they need. So IRS is looking for different ways to be more efficiently operated. And one of the things they're doing now is looking at the percentage of tax returns that are being audited. And that percentage is getting smaller and smaller every year. So to deal with that, they are doing a couple of things. One, they're doing more audits by correspondence, so that you get a letter in the mail saying your return is being audited. Send us the documentation to support these expenses. Or explain to us why this income was not reported on your tax return. Looks like very innocent correspondence, but you have to be very careful as to how you respond to those letters. So that's one of the things they're doing. Secondly, they are changing the audit protocol so that when they identify a return to be audited, rather than auditing the entire tax return, as they have done for years, what they call a complete audit, they're now doing what's called a limited audit. So they're selecting a few items on the tax return, maybe as little as 2 items, and they're just requesting verification on those 2 items. Again, it's a face-to-face audit, this type of audit for the most part. So you have to be very careful as to how you address those items they're asking for. They're not limited to those items. They can later expand and go into other items with management approval, and that will be happening. So this is a new program. They're trying to get more audits under their belt. They're trying to get a greater, what they call coverage, meaning a higher percentage of returns being audited. So you can expect those changes to surface. There are other things that are changing. For example, they're now changing the audit process on partnership returns, where they will audit tax partnerships and then make the adjustment at the partnership level, and the tax will be assessed against the partnership rather than the partners. This is a substantial change. So if you're involved in partnerships, you might discuss with your tax matters partner in that partnership how they're dealing with this. This new process will go into effect in January of 18. There are some remedies for that. You can opt out of that new program. It's a fairly complicated process, but certainly can be done. If you need help with these matters, or if you need the assistance in the event of an audit, please feel free to contact my office and we will arrange a free consultation, either in person or by phone. I'd be happy to do that at your convenience. I look forward to hearing from you, and we appreciate your attention. Thank you.